Imagine these like invisible highways carrying all the data, these massive streams
Hmm.
that power today's AI.
Mm,
They're not just tech marvels, right? They're essential. The plumbing, really.
absolutely. The backbone.
So what happens when a company that builds those highways uh, puts out an earnings report that really makes Wall Street sit up and take notice?
Yeah, that gets attention.
Today we're doing a deep dive into Astera Labs, ALB. They're right at the heart of semiconductor connectivity for, rack scale AI.
Those massive AI compute units.
Exactly. So
Yeah.
our mission here is to unpack their Q2 2025 results, look at what's driving this performance, and, well, what it all means for the future of AI connectivity.
Sounds good.
We've got their official release, financial analysis, the earnings call transcripts, and multiple angles. Let's jump right into those numbers. They were pretty eye-popping.
They really were. You're right to start there. Astera Labs reported record quarterly revenue, $191.9 million for Q2.
Wow.
And the growth is what's really striking.
Yeah.
I mean, 150% year over year.
Yeah.
That's huge. And 20% sequential growth quarter over quarter.
150% year over year.
Yeah. And it just blew past market expectations.
Yeah.
Really shows the demand is strong.
And it wasn't just revenue, was it? Because sometimes when you scale that fast, profits get squeezed.
Right. That's often the worry. But they managed that incredibly well. Non-GAAP diluted EPS, earnings per share, came in at $0.44.
44 cents. Okay. And the forecasts were much lower.
Oh, much lower. Some sources pointed to like a 300% earnings price compared to maybe an 11 cent consensus. Others compared it to 0 to 33 cents. Either way, a massive beat.
That's incredible.
And their efficiency, operationally speaking, was really clear. Non-GAAP gross margin hit 76.0%. That's up 1.1 percentage points.
76% gross margin.
Yeah. And the non-GAAP operating margin, 39.2%. That climbed 5.5 percentage points. So really strong signs of, well-run ship.
Those kinds of margin jumps while you're scaling, that says a lot about the business model. And I mean, in this market, capital intensive, growing fast, cash is king, right?
Absolutely critical. And they delivered there too. Strong operating cash flow, $135.4 million for the quarter.
Nice.
And they ended Q2 with a really robust cash position, $1.07 billion in cash and equivalents.
Okay, so they're well funded.
Definitely. And all this, the results plus the cash, it boosted investor confidence immediately. The stock jumped, 9% after hours?
Yeah, I saw that. A pretty clear signal from the market.
It really is. Signals they see not just growth, but like financial discipline behind it.
So that strong reaction says a lot. And looking forward, their Q3 guidance, it sounds like they're keeping the foot on the gas.
Yeah, the optimism continues. They're forecasting Q3 revenue between $203 million and $210 million.
Which is also above expectations.
Significantly. Wall Street was looking for maybe $180.7 million. So quite a bit higher.
Okay.
And for non-GAAP EPS, they're guiding 38 cents to 39 cents, again, beating the street's view of around $0.34. The CEO, Jitendra Mohan, he actually called this guidance sort of establishing a meaningful new revenue baseline.
Yeah.
Suggests it's not just a blip, it's sustained acceleration.
Right. A new normal,
Yeah.
potentially. So for you, our listener, what does all this financial firepower really mean? How did they pull off numbers like this? And why is it so important for AI overall? Which kind of leads us perfectly into the next bit, how Astera Labs is building those AI highways.
Exactly. Let's get into the how.
So we've seen the impressive financials. Now let's shift from the what to the how. What's the innovation, the partnerships driving this? It sounds like their core products are key.
Absolutely. Fundamental drivers are their PCIe 6.0 solutions and, other AI-optimized connectivity tech.
PCIe 6?
Okay. And a real standout is their Scorpio product line. Apparently, internally, they're calling it the fastest ramping product line in the history of Astera Labs.
Wow. Fastest ever for them.
Yeah. It was over 10% of Q2 revenue, and they expect it to be over 10% for the full year 2025. And looking out further, they think it'll become their biggest product line in the next few years.
That's significant ramp. Can you break down Scorpio a bit? What's in that line? What makes it so central?
Sure. So Scorpio has two main parts. First, there's the Scorpio P series. That's in volume production now.
P series. Got it.
Think of that for PCIe 6.0 scale-out. It connects things in those big custom AI racks that use third-party GPUs, helps them expand and talk efficiently.
Okay. Scale out. Expanding the system.
Right. Then there's the Scorpio X series. This is focused on what they call scale-up networking.
Scale up, so connecting things within the system more tightly.
Exactly. Interconnecting lots of GPUs and accelerators within those huge AI systems. It's in pre-production now, but the key thing is It carries a much higher dollar content per AI accelerator.
Ah, more value per chip.
Yeah, potentially hundreds of dollars per XPU because it's handling these critical super high-speed links. Scorpio X is slated for high-volume production in 2026,
2026.
and they see it as a crucial anchor socket for the next generation of AI racks.
An anchor socket, meaning like foundational. Everything plugs into it.
That's the idea, a foundational piece that other key systems rely on for their core function.
This next bit seems really important too. Their partnerships. And this push for open ecosystems feels like a big part of their strategy.
It absolutely is. Look at their collaboration with NVIDIA on NVLink Fusion.
Yeah.
That gives hyperscalers, Google, Amazon, Microsoft, more options to build these high-performance scale-up networks using NVIDIA tech.
Right. More choices for the big guys.
And then they were on stage with AMD at their big AI event, showing off their role as a trusted partner for UA-Link technology.
UA-Link. We'll definitely need to dig into that. AMD sees it as a game changer.
Yeah, they do, for new scale-up designs. And Astera is also partnering with Alchip Technologies. That's about integrating custom ASICs with connectivity, which basically expands Astera's potential market.
Okay, so speaking of UA-Link, that sounds like a really big deal for the whole industry. What exactly is it? Why is it getting so much buzz?
Yeah, UA-Link Ultra Accelerator Link. It's pitched as open ecosystem AI solution. Think of it as a memory semantic fabric.
Memory semantic, meaning it helps processors share memory really efficiently.
Exactly, like the memory is right next door, even for lots of different units. It offers high bandwidth, super low latency, and crucially broad interoperability.
Interoperability. So different vendor stuff can work together.
That's the goal. It tries to combine the best of PCIe, which is great for low latency, and Ethernet, which is great for speed. So it's purpose-built for AI workloads, optimizing data flow better than traditional networks often can.
Makes sense. Is it getting traction?
Seems like it. They mentioned a tremendous amount of interest. Over 10 unique hyperscalers and AI platform providers are already looking at using UA-Link.
Wow, 10 hyperscalers, that's significant.
It is. They see it as a long-term growth driver, really taking off from 2027 onwards. And most of these discussions are already at 200 gigabits per second per lane.
Which is incredibly fast for these links.
Very fast.
Astera's CEO, Jitendra Mohan, he has this really compelling idea about all this, doesn't he? Like, connectivity is going to be the key differentiator.
He does. It's a powerful vision. He basically argues that the high-speed connectivity market will grow faster than AI chip shipments themselves.
Faster than the processors.
Yeah. He says, Astera is building the highways for AI, and he's putting numbers on it. He projects that just scale-up connectivity for rack-scale AI could be close to a $5 billion market opportunity for them by 2030.
$5 billion by 2030. Just for that piece.
Right. And this vision ties into this industry shift towards AI infrastructure 2.0. That means more open, standard-based AI rack platforms. Astera wants to be an anchor partner in that shift.
And it's not just chips they sell, right? It's more like a whole platform.
Exactly. It's a full portfolio.
Yeah.
The silicon, yes, but also hardware like their Taurus active electrical cables and software, their Cosmos suite.
Cosmos.
This integrated approach is key. It ties everything together, allows customization, and gives customers rich diagnostics to, tune performance in these super complex AI systems. It's about the whole solution, not just the parts.
So, okay, let's unpack this. How do these partnerships and these specific technologies, how do they translate into those aha moments that really move the AI industry forward? It sounds like more than just speed.
That's a great way to think about it. The real aha isn't just faster pipes. It's about decentralizing power, maybe, in AI infrastructure.
Decentralizing power. How so?
Well, historically, hyperscalers often got locked into proprietary single-vendor solutions for these critical interconnects.
Right. Yeah, vendor lock-in is always a concern.
Exactly. So Astera's push for open standards like UA-Link is not just a tech upgrade, it's strategic. It enables multi-vendor supply chains.
So the hyperscalers can mix and match.
Precisely. It gives these huge players way more flexibility. They can choose components from different suppliers. That drives down cost, reduces the lock-in risk, and it speeds up innovation because there's more competition and collaboration.
Right. Proprietary systems can stifle that?
They can. So that's the shift, moving from these closed, kind of rigid setups to a more open, collaborative, agile way of building the AI backbone. It puts more control back in the hands of the hyperscalers themselves.
That makes a lot of sense. But connecting this bigger picture, all this growth, this strategy, it brings us to the elephant in the room for investors. The valuation.
Yeah, that's definitely part of the conversation.
So let's talk about that premium valuation. Astera Labs stock, the PE ratio is what, 471, which is way higher than the average for the tech sector. So for you, the listener, what does a premium like that signal about the market's confidence in AI connectivity, and where does Astera fit?
It's a sky-high valuation, no doubt, but it signals, I think, immense market confidence in just how fundamental, how non-negotiable high-speed AI connectivity is.
Like, it's table stakes for future AI.
Exactly. And specifically, confidence in Astra's execution within that critical space.
Yeah.
Now, the premium gets some justification from that 150% YoY revenue growth we talked about, the expanding margins, a strong cash flow.
Right. The fundamentals are strong.
They are. And, compared to peers, it trades below a giant like Broadcom's PE, which is over 600, but well above Credo's around 300. So it's positioned as a real high-growth leader in its niche.
So the market's pricing in continued massive growth.
Essentially, yes. It's pricing in that ambitious 70% revenue growth forecast the company has. The bet is that this growth isn't just sustainable, but actually vital for where AI is headed.
But high growth, high valuation usually means high risk too, right? What are the potential headwinds? What challenges does Astera face?
That's the crucial question for anyone looking at this. Despite the bright picture, there are absolutely risks. You've got potential supply chain issues, always a factor in semiconductors.
Always looming, yeah.
Increasing competition. Broadcom is a behemoth, and you have specialized players like Credo Technology nipping at their heels.
Competition heating up.
Definitely. Then there are broader macroeconomic pressures. Could IT spending slow down? Plus, the relentless need for constant innovation. You can't stand still in this field.
Technology moves so fast.
And finally, regulatory changes could always impact things. So yeah, it's a complex path they have to navigate.
It sounds like that competitive landscape, especially around different connection types, is pretty intense. How does Astera's focus on UA-Link and PCIe stack up against, say, Broadcom pushing scale-up Ethernet? Seems like a real architectural fork in the road.
It really is, and it's a key distinction. Ethernet is fantastic for, general internet traffic, cloud data centers, but it wasn't originally built for the specific needs of scale-up AI, that low-latency, memory-focused communication.
Right, different design goals.
Exactly. So Ethernet can have higher latency, unless you customize it heavily. UA-Link and PCIe, though, they were purpose-built for memory access, for AI semantics.
Yeah.
The result is just inherently lower end-to-end latency, more efficient bandwidth use, because they're designed for getting data between accelerators fast.
Purpose-built advantage.
Right. And Astera, with Scorpio X and UA-Link, they claim they can get even lower latencies than Broadcom's reported 250 nanoseconds for its custom Ethernet solution.
Lower than 215s? Okay.
But maybe the biggest differentiator for UA-Link is that open ecosystem and multi-vendor supply chain aspect we mentioned.
That flexibility again.
Yes. It gives hyperscalers way more choice, more control, compared to potentially more proprietary solutions that might lock them in. It's about avoiding being tied to one vendor.
So that openness is a huge selling point for their customers. Now, you mentioned great gross margins earlier, but I saw their Q3 guidance has a slight dip, maybe down to 75% from 76% in Q2. What's behind that? Is that a worry?
Yeah, it's a slight dip. It seems largely down to product mix. They're seeing more growth in their Taurus hardware modules, things like the active electrical cables.
Ah, the hardware versus silicon mix.
Exactly. Those hardware bits are essential for the whole platform offering, but they tend to have slightly lower margins than just selling the silicon chips.
Makes sense.
But importantly, the company reiterated its long-term target of 70% non-GAAP gross margin.
So they're still confident in maintaining strong profitability overall, even as the mix shifts a bit. It seems more strategic than like a fundamental problem.
Okay, not an erosion of profitability, just a mix shift. Now, we've been laser focused on AI. Obviously, that's the big story. But is Astera playing in the non-AI space too? General purpose computing, diversifying.
They are. Yeah, AI is definitely the main engine right now, but they are actively looking at opportunities in the broader non-AI market.
Like what?
Well, engagements with new CPUs, like AMD's Venice chip, which supports PCIe Gen 6. That creates new demand for their core connectivity stuff in just regular servers.
Okay, traditional data centers. Right. And they're also developing CXL controllers. That's their LEO product line. Those are for memory expansion and general purpose servers. So it helps diversify their growth beyond just AI accelerators, tapping into how data center architecture as a whole is evolving.
This brings up a key question, I think, for you, the listener. How does understanding all these technical details, these market dynamics, how does that help you figure out the true value, the future path of companies like Astera driving the AI revolution? It's deeper than just the stock price, isn't it?
You've hit on a really critical point there. For someone learning about this space, getting these details takes you way beyond just, watching the stock ticker or chasing headlines.
Right.
It lets you understand that a company's real value isn't just today's sales. It's about their strategic position in a massive shift, like this move to AI infrastructure 2.0.
Seeing the bigger picture.
Exactly. Recognizing the long-term difference between open ecosystems and closed ones, or why purpose-built tech like Ulink might have an edge. It gives you a much deeper way to evaluate if a company's success is sustainable, if they're truly leading. It's about seeing how the plumbing of AI, the connectivity, is just as vital as the processing power itself.
It's the difference between just watching the wave and understanding the currents underneath.
That's a great analogy. Yeah. It's about understanding the foundation.
So as we wrap up this deep dive, it's clear Astera Labs turned in a really impressive Q2, beat expectations, showed strong growth and profitability. They've really solidified their role in enabling this AI infrastructure 2.0.
Through things like Scorpio, their commitment to open standards like UA-Link.
Right, and they're navigating that tricky balance, aren't they? High growth versus competition, supply chain risks, all while trying to expand into AI and general compute.
It really underscores how crucial these data pathways are becoming. Robust, fast, super low latency connections. The future of AI isn't just faster chips, it's how efficiently those chips talk to each other in these huge complex systems.
The data flow is as important as the processing.
Absolutely.
So here's a final thought for you to chew on. Think about how these invisible highways for data built by companies like Astra aren't just cool tech. They're fundamentally shaping the architecture, the accessibility, the ultimate potential of future AI. What does that mean for the next wave of innovation? How will these connections keep evolving in ways we might not even see coming yet?